Ready? Good morning and welcome. My name is Clint Dockendorf. I'm the Midwest Regional Manager for Mayo Employees Federal Credit Union. Been with the credit union for 5 years and in banking for about 25 years. Today we'll be talking about financial wellness. Some of the topics we're going to discuss are budgeting, saving, managing debt, retirement and financial planning, managing your money, and watching for scams. So let's kind of jump into budgeting first. One of the key habits to budgeting is to build healthy habits. It's to make sure you're managing your expenses, paying your debt on time, and start savings for the future. These are kind of some of the key aspects when you start a budget. Setting your financial goals. These are both short-term goals and long-term goals, and we'll touch base on these a little bit further in the presentation. When you're setting a budget, it's simple as keeping track of all your expenses and your income. Make sure that your expenses are paid for each month and you have the funds to do so. Then you want to continue working on a savings account. So the main thing is emergency savings account. It's make sure those situations when you don't have funds available or income available, that you have funds to pay your bills each month. So a budget, where to start? So a budget is simple as tracking your income versus your expenditures and figure out how much money you have left over for savings. So when setting up your budget, you want to make sure that you're looking at your take-home pay. So this is the amount you get in your paycheck each month. Make sure that that's the money you use on there. From there, you want to look at your fixed monthly bills. These are going to be things such as your mortgage, rent, car insurance, electricity, utilities, internet, any credit cards you have each month. Big thing when people talking about this, they're like, well, my gas bill, my electric bill vary. Figure out what the average bill is each month and figure that out for the year. After you have those listed, then you want to look at your variable expenses. These are going to be the dining out, going out to eat, gas for vehicle, any hobbies or entertainment you want to spend. And finally, you want to see what's left over for savings. This is where you want to figure in your emergency savings, anything you're saving for specifically, and any items that you may need to use funds for in the future, vacation, new refrigerator, stuff like that. So these expenses are going to factor in, and then you kind of see what you have left over. And the example we have here, showing that there's a surplus of $690, then you want to allocate that throughout the budget and figure out where that's going to fit, where you can save some money, and where you can put that into the next category. So some ideas to reduce your expenses. Obviously, we'd all like to increase our income. That's not as easy, but we can help where some of the expenses are. So one of the few things we can look at is changing your cell phone plans. Oftentimes when we get that cell phone, it comes with a plan provided by that provider that it's accompanied with the cell phone. Those change constantly. Look at your cell phone plans, see once if you can save any money on your data. Gym memberships. This is a big thing we see here at the credit union. Members come in, they have a gym membership that they paid for, but they're not going to. So gym membership, clubs that you belong to, look for those on your bills and make sure it's something you're using. If not, go ahead and cancel that. That can save some money in the budget. Streaming services, obviously cutting the cable cord, something that we're all familiar with. But one of the options that are out there is look at some streaming services, whether YouTube TV, having like the Netflix, stuff like that. Look for stuff that you're using, but watch out for those services that you have 2 months free of HBO, and then also you forget to cancel it and you're paying for HBO each month. So watch for those items that are on your credit card bill or however you're paying, and get rid of those as needed. The one other important thing is to move your checking account into a fee-free checking account. Most banks and credit unions have free checking. You want to make sure that you're not paying for services that you use on a daily basis, and that's something we can help you out with. Another important thing is to look at loans you have out there. Make sure you're in the best interest rate possible. Make sure that you need to refinance those into a rate that's current with what the market is to help lower that monthly payment. We have loan officers on hand that can review your loans and make sure you're in the best rate possible. And then just want to tailor your goals to your lifestyle. What's your lifestyle look like? Is going out to eat important to you? Is traveling important to you? Make sure you just budget for those items and make sure all your money is working for you. So I want to talk about savings. Obviously, that's when we do the budget, that's one of the most important parts. The most important thing you want to save for is emergency savings. So this is one of those, if you were to get injured at work or hurt and your income has reduced for a period of time, you have 6 to 9 months of your living expenses saved in an account. This is going to help make sure that you're able to pay for your bills even when you're out of work. Short-term savings, these are going to be things like car down payments, new tires on a vehicle, appliances that you may need. This is going to be a good goal to save for those short-term things that you know you're going to need in the future. One thing we recommend with car down payments is you set aside how much you think that payment is going to be for you. So if you think you can afford a $650 payment, put that in your budget and start tucking that money away into an account. It's going to tell you two things. It's going to tell you, hey, is this payment amount comfortable with my budget? And then is this something that I can afford once I buy the vehicle? Put those funds in an account, you've started to build a down payment for that vehicle. Another important part with this, then it's going to tell you, is that something we're looking for? Then we can help you, find a budget that works best for you to find the vehicle that fits your needs. Long-term savings, these are going to be things like down payment for a house, investments, any investing goal you want to do. These are going to be the large purchases. So these are things down the road, whether it be retirement, like I said, down payment on a house. Some bigger ticket items, this is kind of what you want to start savings for. But you want to touch something in all categories. Obviously, the emergency savings is the most important because that's something that just good to have there. So some few ideas to help save some more money than we have right now. So set goals, whether it be financial or habitual. Make sure you're getting that repetitive habit of saving each month as part of your paycheck. Easy way to do that is automate it. So make sure those funds that you have in your checking account when on payday get swept into a savings account or into a different account. So they're just not at your disposal. If you can't see it, sometimes you can't touch it. Another idea is to meal plan, to dine out less. The average household eats out 3 to 4 times a week. Cut that down to once on the weekend and once during the week. That's going to save a considerable amount of money. So buy a few extra groceries and meal plan at home. Carpool to avoid any extra trips. So if you have a coworker that lives near you, see if you can carpool. Save some money on gas. Obviously, with rising gas prices, this is a key factor to look into. And then another thing is sell any items you no longer use, right? So you got the clothing, baby gear, any household items. Have a garage sale, sell it on Marketplace, Facebook, whatever the situation may be. Look to reducing increase some income by selling some of that items. And then finally, if feasible, add another job, right? Uber driver, Lyft driver, DoorDash, something that fits your lifestyle, add that into your income. So ways to save services and accounts. These are some of the ways that you can save your money. Always recommend a high yield savings account. Make sure that money isn't sitting in your checking account, not earning any interest. You want to make sure your money's working for you. So it's sitting into an account, earning some dividends each month on that. Certificates, CDs, these are long-term products, anywhere from 3 months to 5 years. You put your money into it, it earns a little bit higher interest rate, but you can't touch it without a small penalty. Also a great way to save some money. Putting in there just to tuck it away so you don't get at the funds. If you're looking to save for a child or a grandchild, excuse me, we have youth and teen certificates. These are for children or minors 18 or under. They can earn a high rate of interest on these, and it's a good way to teach the kids how to save money. Educational, right? This would be your 529 Coverdale plans. We have financial advisors on staff that can go over these options for you. It's another great way to prepare for either your education or that of your children or grandchildren. And then finally, traditional and Roth IRAs. These are retirement accounts that you can contribute to. This is going to help build for the future for retirement. With IRAs, you can't touch them until the 59 and a half. Like I said, another great way of putting these things, money to work for you. And then take advantage of any pre-tax savings or pension. These are going to be your 401ks, any employer-sponsored plans, profit sharing. Take advantage of those options that are out there. A lot of employers do offer matching, and that's a good tool to have at your disposal. So we'll talk about debt. So obviously when managing debt, your credit score is the driving factor. It determines your interest rate, determines if you're able to get loans, and even if you can rent an apartment. So credit report is very important to you. Just kind of know how your score is calculated, and I'll kind of go over that here in a little bit. There'll be 5 main factors that go into credit score, and we'll touch base on that here shortly. And make deliberate choices. So applying for every credit card you see, applying for every loan, just applying to see what your credit does not help, because the more you pull your credit is going to decrease that score. So monitor your credit report at least once per year. So 3 main credit reporting agencies. There's Equifax, TransUnion, and Experian. And what you want to do is pull one of those credit reports each year. You're allowed 1 free credit report per year using annualcreditreport.com, or you can call that number. You can simply go right online, request that report, review what's on there, and take a look at it. If you don't know what's on there, bring it into the bank. We'll go ahead, or the credit union, and we'll go ahead and go through it, take a look and see what's on there for you, and kind of help you go through that report. You don't need to pay for the score. There's a lot of options out there to get it. Just bring it in and see one of our loan officers and we can kind of tell you what we're seeing on that credit report. So how does the score get calculated? Each company has their own calculation, but it runs into these 5 main categories of how they calculate your credit. So the biggest one is payment history, right? So how are you making your payments on time? How frequently you're making payments? Are you staying up to date? That's at 35%. 30% is the amount of money you owe. How much money do you owe on your credit cards? How much do you have a balance on your loan? We got credit mix and new credit. Those both factor in 10%. So the credit mix is just going to be do you have variable debt? Do you have fixed rate loans? And then new credit is credit you applied for. And then finally, 15% is length of credit history. Obviously, that's how long you've had credit. I want to talk a little bit about payment history. You want to make sure you pay your bills on time. It's kind of the most simple part of it. Make your bills, pay them each month, and it's going to show as a current payment on your credit report. If you miss a payment, right, things happen, we forget about a bill, make sure you get caught back up currently. So if you miss a payment and then just pay it, but you're always 1 month behind, that's going to negatively affect your credit because it's going to show as a constant late payment. And finally, if you can't pay your bill on time, contact your creditors. Don't be afraid to call who you owe the money to see once if there's anything they can do to help out. Trust me, the creditors, they want to get some sort of payment rather than no payment at all, and they're there to help you. New credit. So these would be things that you apply for. You want to limit the new increase. So go to a store, they offer 10% off if you apply a credit card. That's fine. Don't do that at every store. Use that for major purchases. So whether you're buying an appliance, something like that you're going to see the biggest benefit, use that for that situation. But only do it as needed. Have a few credit cards. We always recommend you have a card that has some sort of rewards or points basis to it so you can earn money on this money you spend. And then close any old cards you're not using. You want to make sure that they're out there and done. Just because you're not using the card doesn't go away. So that's why it's important to look at your credit report. We'll go through and see any cards you're not using and get rid of those for you. Length of credit history. This is basically talks about how old or how long you've had credit report on there. That's why it's important to start credit very early. Even if it's something as simple as a small credit card, it just starts that payment history on there for you. It'll help you down the road. And don't apply for unnecessary credit card accounts. This is kind of what we talked about. Every store, every place is going to have some sort of credit card. Only use them for ones you shop frequently. So if you go to Shields all the time, use that card. But use the bank's credit card too that has a rewards program. So use caution when open new credit cards to transfer balances. That's the thing where you're trying to transfer your balance month or from credit card to credit card and never really paying it off. It can get you into a cycle where you just get way further behind. And then obviously avoid payday lenders. These companies are going to have interest rates from 200 to 300%. They're going to fill an immediate need, but then you're going to be so far behind that it's going to negatively affect your credit. Another thing we'd like to look at on your credit report is student loans, what you have out there for student loans. Obviously, it's been in the news a lot, so there's multiple different types of loans. So you have federal loans, private loans, subsidized, unsubsidized. Obviously, there's many different types, and you want to understand how your repayment options are on these. Student loans are typically going to have a few different payment options. 10 years is a pretty common one. You're also going to have a 25-year, a long-term. You're going to have a graduated plan. So each year your payment goes up with the expectation that your income increases each year. And then finally, you're going to have some sort of deferment period at the time. Obviously, student loans are a lot in the news. They're talking about Public Service Loan Forgiveness Program. I'll give you the website is studentaid.gov and kind of find out a little bit more about this program. And then prepare for repayment. Know that these student loans are out there and chances are you're going to have to repay those back. So you want to plan for that. Plan that in your budget. If you've been out of school 4 months, typically a 6-month deferment period, know that payment's going to come out there and be ready. I want to talk about some different kinds of debt. So we have good debt and bad debt, right? So good debt is going to be something that you're paying a small interest rate for that's going to provide value to yourself or your family. So mortgage is the most common one of those, right? You're going to pay a low interest rate for an asset that's going to appreciate in value. So the longer you own that home, the more it's going to be worth from the time you bought it. So that's considered good debt. Education, that's another good debt option out there. You're investing in yourself. You're going to get these student loans, usually at not too bad of an interest rate. It's going to increase your education and make you more marketable in the workforce. Bad debt, credit cards, store credit, cash advances. Some of those items that you think of when you think of bad debt, there could be a high interest rate, there could be a variable rate, and the payments are going to vary. You're not going to know what those payments are from month to month based on what you owe. Another source of bad debt that a lot of people don't realize is a vehicle loan. A vehicle loan is considered a bad debt because usually the rate's not bad, but you're paying for a vehicle that's going to depreciate in value. So when you buy that vehicle, it's going to go down in value from the day you purchased it. So that's why it's considered bad debt. This is also why we talk about down payments important. So if you buy a brand new vehicle, pay full purchase price, you drive off the lot, immediately your loan is more than what you owe, what the vehicle is worth. But the more you can put down, it's going to get you in that balance those funds out. Kind of want to go back to this actually. It's important when you're paying off your debt and setting up your budget to pay off the bad debt first. Obviously look at credit cards, anything that's at a high interest rate, and then from there go any money at the good debt. Financial planning and retirement. So we have financial advisors on staff. They can talk to you about paying off your debt. So what you want to do is, as you get closer to retirement, get older, you want to make sure you have a reduced amount of debt. Let's go overall and help make your money more valuable to you, the less debt you have. College savings, we have the Coverdale 529 plan. If you're whether to save for yourself, grandchild or child, we have some plans out there that can help you with that. Life insurance, to make sure you're protected for that unforeseen circumstance and help protect your assets. Estate planning and trust, obviously this is kind of going to kind of leave that nest egg for your beneficiaries and to make sure your money is protected in case something were to happen to you. And then long-term care. Obviously, as we get older, long-term care is something important. There is options out there as far as insurance and some programs that help saving for that to help protect the money you do have when you get to that situation. Retirement planning, kind of identify what your retirement goals look like. What's retirement look like for you? I want to travel in an RV across the country. My wife wants to sit on a beach, right? So two different goals. Kind of got to find out what's going to work for each family, what's going to work for you, and that's going to help you decide how much money you need to save for retirement. And you want to be prepared, right? Take advantage of some of the things that are out there. Contribute to any employer-sponsored plans. This would be your 401k, profit sharing. As much as we think that will be fine, the sooner you can start contributing, the better. Some of the options we have are traditional and Roth IRAs, right? These retirement accounts, it's a good way to tuck money away for retirement, to be ready, not just based on your 401k, but you got to invest in yourself too. Understand government benefits you may qualify for, right? So there's the Social Security, whatever it may be, understand what plans you have out there that you can use. And then save for retirement as early as possible. This next is a little graph kind of talking about if you were to invest money, at what age would you get to $1 million by the time you turn 65? Obviously, we have that 15-year-old that's earning $60 a month, putting towards savings. That's all they have to do, $60 a month for the rest of their life, and they get to $1 million. The thing with this, at 35, it takes 440. The key with this is, remember, you can start at any age, and something's going to be better than nothing. But just the sooner you can start contributing, the better. So start right away, get to that point, and then you can have a nice little nest egg built up for retirement. Manage your money. Banking is no longer a 9 to 5, 8 to 5 job. You can't just do your banking, come in, do your deposit, and leave. With working longer hours, there's tools you can use to access your accounts, whether it be online banking, mobile deposit. You can do deposit from your living room. Automated bill pay and digital wallets. These are some great things to utilize to take advantage of the accounts that you have. And then you can open accounts and apply for loans online. I recommend you go to our website. We have a lot of great tools out there as far as bill pay, some great charts, and we also have a budget calculator out there you can use. I want to talk a little bit about scams. So in 2021, there's $5.8 billion lost in fraud. That was a 70% increase from 2020. It impacted more than 2.8 million consumers. Those numbers have increased this year. We don't have the exact numbers, but it's even higher. So these fraudsters are getting smarter and smarter, and they're coming up more and more ways to get at your funds. They can contact via text, email, phone, website, and other methods. If you get a call that they tell you don't tell anybody, or they want you to send money for money that you earned, or you won a lottery that you never applied for, if it seems too good to be true, it probably is. But if you have any questions, come into the bank. We'll be glad to go over this with you and see what we can help make sure it's legit. That's all I have today. Does anybody have any questions?
should you put into retirement if you're trying?
Yeah, that's a good question. So what you want to do is want to have that equal mix. So find out how much you have right now, and you want to split your retirement between short-term savings, or I'm sorry, emergency fund, and then just get some on there. But we do have financial advisors on staff. That they can do is they can meet with you and come up with a plan and tailor it to you. And that's where you kind of want to find out what your retirement's going to look like and how you want to invest. Yeah.
Could you touch on a little bit more about 529?
Sure. So I am not licensed in 529 plans, but we do have advisors on staff that can go over those. So what we'd recommend is go to our website, schedule an appointment with one of our financial advisors, and they can touch on that.
They're correct.
That's correct, yep. All right. Well, I want to thank everybody for coming today, and I appreciate your time. If you have any questions, please visit our website or give us a call.